So, hello and very good evening, everyone who has joined in. We will begin our session shortly. Before that, I just want to welcome everyone. Hitomi, that's a new guy. Written something in Japanese, I suppose. No worries. The session will be in English, and I will try my best in order to uh, create sense. Yes, welcome. Hello. Those who are joining in, a very good evening, and welcome to yet another episode of Market Insight. Yeah, hi, Tom. So that is fine. So we will begin our session shortly. Before that, I just wanted to remind you that this will be the last live market session from my side, from your humble analyst uh, for 2022, and we will be welcoming 2023 in the next week. So I'm quite excited about it. I hope so that everyone who is watching live, as well as those who will be watching the replay of this video, we are actually excited about what's going to happen and what trading opportunities and what all opportunities await us in 2023. It is going to be an outstanding year because there is a lot of economic data overflowing everywhere. There is increasing financial information, increasing financial education, and presently we are presently trying our also we are giving our humble efforts in order to increase that financial education and to provide the education that is required and the information that is required for the people to trade better and become a better trader to improve their trading quality as well. So I really welcome everyone for this last session of 2022. Today's session will be quite interesting because it is somewhat related to the previous session that we had regarding the moving averages. So, moving averages are going to be our last focus for this year. And as previously mentioned in the previous live session, moving averages are really good indicators. They are lagging indicators. Now, there are two types of indicators. Okay, listen to this very carefully. Those people who have joined in, thank you very much for joining in. We'll be beginning the session, so let's just get ready, get prepared, and yeah. So the first thing to note is that why I'm focusing more on moving averages because in the previous live session you will notice that somebody has put up a very good comment in that person was saying something about copy trading. I hope my voice is audible and there is no technical issues at all. I suppose so. If it is all right, then just put a thumbs up on the chat box. If there is any kind of a audio lag or a video lag or any form of a problem, then just let me know in the chat box. If it is everything is all right, just post an okay or a thumbs up in the chat box so that I know everything is going fine and you are able to hear me, right? So I was talking about the previous video, previous session, where I was explaining in depth why moving averages are very important from the perspective of trading as a confirmation indicator. Thank you very much, Vishal. It's clear. Okay. So it is a confirmation indicator where we can confirm that whatever hunch we are having, whatever indications that we are getting, it's completely okay to go with it forward, and they are lagging indicators. There are basically two types of indicators. First is a leading indicator. Okay, actually, there are three if we are talking about it. So there are three types of indicators. The first one is leading indicator. Leading is basically which tries to predict the future. Okay, what is leading indicator examples? Leading indicator is RSI or relative strength index. RSI is a leading indicator. Why is it that it is a leading indicator? Because we will see in the future, I will be diving deep into RSI just like we are diving deep into moving averages right now. We will see that RSI is a very good indicator in terms of predicting the market movement in the future. So this is predicting kind of indicator, right? Also, just wanted to notify everyone that this session will be purely in English. Okay, I have prepared one Hindi session that will be exclusively in Hindi in the first month, in the first month of this auspicious year that we are going to have, 2023, right? So just give me a moment. Yeah. So I was talking about leading indicators. So leading indicators example is RSI, relative strength index. You might have used it. You might have taken its indications as well. You might have traded based on the indications of RSI, 70/30 or 80/20, whatever your preference is. But the thing is, leading indicators are predictive in nature. They tend to predict the future market movement. Okay. There is another form of indicator which is called concurrent indicators. Concurrent basically means they work with the price action. Okay, they go alongside price action. Okay, they are not trying to predict nor they are trying to confirm something. Okay, they are in the middle. And the last one that today's session is all about, the moving average and the exponential moving average. So uh, exponential moving average, these are called, this club of indicators is called the lagging indicator. Okay, I will just show it to you on the chart. It will be all very clear. Okay, so what is a lagging indicator? Lagging, obviously, from the word itself, you try to get a feel of what lagging means. Lagging indicator is basically which confirms the price action. Okay, it does not predict, it confirms the prior trend. Okay, which has already happened. It is just confirming, yes, this has happened. Okay, now this has happened. This stands here for an uptrend or a downtrend. Okay, yeah. So there might be an uptrend going on, but how to confirm that this uptrend will sustain in the future? This sustenance wala confirmation is given by a lagging indicator. We usually use a lagging and a leading indicator. Okay. So this is the idea behind indicators. Indicator study is complex. It is, it is very much complex if you want to get into it. On the other hand, if you want to be simple and trade simply, you can find two good indicators which work on a particular uh, asset that you are working in, and they work, right? They work. They show you clearly the signals and they confirm those signals as well. You can use those two indicators, and one of these indicators you may use is the exponential moving average. It is my absolute favorites. I do not endorse using this and trading using it, but this is just an idea that exponential moving average is very good indicator. Okay, I'm not confirming or I'm not suggesting it's used to trade. I'm just giving an educational idea about exponential moving average. That's it. Okay, so let us begin today's presentation. Uh, we will directly jump onto the market as to what is going on and how everything is working. So let me just clear things up for you guys. So this is the scenario of the market. I suppose everyone can see the uh, screen. Can everyone see the screen? Yes. Good evening, Mantan. Those who have come in, very warm welcome. Very good evening, and those who are watching, uh, just give me a moment. Sure. Okay. So I suppose everything is okay. You can see the screen. Fine. So USD JPY has been quite in the news, and everything is going on upside, downside. What is going on? Okay. So let us just see. Let's put up this. I have to get into the settings. No worries. We'll see the daily. Okay. So this is the scenario right now. This is the day when the dollar plunged on the news that the Japanese bank, central bank, has put okay. So there were some problems with the internet. No worries, we are back. Don't worry, Tommy. I'm here for you. Okay. So we'll just restart it again. Okay. So let us see this one. I've drawn some lines. Just ignore those lines because these are important. I cannot just remove all these. Let me just hide all these. Okay. So this was the plunge that we saw on the news that central Japanese bank has. Okay. Now is it back? Now is everything back? Okay. Let us just wait. Just give me a moment. Yes. I suppose that will go because of some network issues. This happens. Okay. Don't worry about it. Uh, I suppose now the voice might be clear. We'll just continue. Let's see what happens. Okay. Not something which is very, very important. What has happened in the week, that is just what we are discussing right now. So, this was the plunge on the single day within 15 minutes. If I will open now, you will see within 15 minutes this plunge happened. And now, after hitting a good floor level, this is almost a very good support, 130, 131, somewhere around, where it has started going up again. Again, hiding all these drawings. so that you might see again better. I suppose now the voice is clear. I suppose everything is clear. It was just a network issue, nothing else. Okay, and everyone is able to listen as well as to see what is happening, right? So let's continue. So this is the scenario. Okay, it has taken up a good support around 131, 130, and it is completely going up. Now it has not regained its position somewhere around 138 where it was, uh, ranging previously. This is called a range, and it was ranging around this particular position. It has not been able to reach all the way. Okay, and yesterday we saw a green day because of certain news. Today also we are seeing some red or a bearish candle. Now this bearish candle is somewhat of a threat for the dollar's uprise. Okay, now why this is a threat? Because the current situation is not very good considering the China lockdown, and considering all the oil problem is also there, because there was a strong plunge in oil as well. So let us see if we can see oil somewhere around. Okay, let's put up Brent. Okay, now Brent is not visible. So for US or USD, this one. Yeah. So we have seen that it has been plunging intraday as well, and it has came up to the point of 81. Now it's trading around 77. Yesterday it plunged very good. Okay, good shorting opportunity came multiple times. You can see here the first one was somewhere here in the morning, in the evening, and today it came somewhere around in the morning itself. Okay, so this plunge has happened because of certain issues in the oil market. Okay, we don't need to worry about the news, we need to worry about what the chart is telling us. So we have seen this has happened and that has happened. USD JPY, we will discuss what is the current support floor level, which we call it support or resistance level, that we will see. Okay, so this is the scenario. This is 15 minutes. Let's turn on to a daily chart. I suppose everyone can see and it's fine with the resolution, I suppose. Okay. Yeah, sure. So this one, yeah, we have seen that the trend line was broken previously. Let us just see and draw a trend line. Okay, I've already drawn it. No worries. This was the trend line that was being followed for a very long time by USD JPY, which broke on somewhere around in November. Now, this day it has acted as a very good resistance. It has gone down again. The levels you see here are Fibonacci as well as intraday levels that I've drawn in this particular section. Okay, all of these are Fibonacci retracements. It has taken a very good support on this level, which was the starting point, which I took to be around this point. Okay, which was 131.7 something. Okay, and now it has taken a good support, vaguely, but surely it is a support. Okay, so somewhere around 130, 131, it has taken a support and it is going up, but it is going to face a very strong resistance somewhere around 135, which I have posted yesterday on the group as well. So 135 was the resistance level, was the ceiling, and now it was reaching up to that point, but it does not seem like that it will reach 135. It might be a small pullback, then it will reach 135, or it might just range in this levels. Now, if we go into the smaller numbers onto a smaller time frame, you will see how finely these levels have been working. Okay, this is the resistance that I've drawn, and let us see what has happened. This is continuously working as a resistance 133.8, and it is trying to go up. To be very honest, this looks like a triple wave figure, but it is not an uptrending triple wave. Okay, three wave, it is not an uptrending three wave. That is why there is some form of a vagueness in this pattern. And instead of looking like it will break this pattern, it is looking as if, yeah. So it is looking as if, yeah, it is looking as if it is ranging just. Okay. So this might be a range that will work for some time. When it will break either ways, we can take a trade in that particular position, or when it will touch the extreme points and it reverses, we can do that trading as well, but it is not required. Okay, breakout is always preferred. Okay, like this one, it took a very good resistance. Now I will show you where this resistance is coming from. Okay, this was the candle that was formed on this day. Okay, such a huge candle. Look at this, nearly 3% loss for dollar within a 15-minute time frame. 8:30, 8:30 was when the meeting started for the Bank of Japan governor or chairman, Mr. Kuroda, in which he discussed about the possibility of monetary easing along with some tweaks in the monetary policy relating to bond, okay, relating to their bond schemes, and they are willing to increase the range of their bond volatility, okay, by 25 basis points in multiple bonds. Okay, and they are thinking to further ease uh, you know the restrictions, and so as to basically perform help the financial condition of Japan, which is currently under stress. Mostly all the economies are under stress, but it seems like Japan is going to try to make it better by changing the monetary policies. Okay, and this is where we are headed. It is completely a range. Okay, 135 is the completely strong resistance level. Somewhere around 134.6 it went, and then it reversed. So yeah, apart from that, 133 is a good support level. You can work with this. Okay, if it breaks 133, then this will be the support level somewhere around 131. So this is the scenario of USD JPY. Now another important point that I will make here that needs to be noticed is that the market is less volatile. Okay, that is why we are seeing very small candles. Now this was a completely shocker, okay, candle, because a lot of people shorted here after listening to Kuroda, but right now we will see all the small candles being formed. Okay, so it is not a good time to trade. It is not a very good, opportune time to trade, because the volatility is down. These are like holidays almost, and new year is coming, so we can say that the volatility will be down, and low volumes can trigger a huge change. So we don't need to play in such markets, okay, where low volumes can dictate the market movements. That market is not very safe from my perspective, from my point of view, right? So this is what is happening in the market for USD JPY. I suppose anyone who needs any other form of currency pair or a stock you need on the charts, you just post it in the chat box, whichever you know currency pair, uh, the first person to post a currency pair, we will do an analysis on that as well. Till that time, till you post this, we'll just go back to understanding what is exponential moving average and what is the difference between moving average and exponential moving average. Both of these things we will try to cover. Okay, these lines are just day change lines. Okay, this might look like a bit of trouble. I will have to try and change this. There's somewhere here appearance, I suppose it was session breaks. Yeah, now it is clearer. Okay, good. So we were talking about moving average previously. We saw that a moving average is very important when it comes to confirming certain trends and how to trade using that trend. Okay, let us put it on 50. and make it a little bit better, visibly white colored. Yes, now it is visible, I suppose. This is a 15-minute time frame chart. Okay, again, we'll put up exponential moving average. You can type in for short EMA and it will appear here. Okay, in the indicators box. We'll keep the same length, that is the look back period 50, and we'll try to change it, the color and the style of it, so that it is visible better. Okay, this is a better looking color, I suppose so. Yeah, we will just see what is EMA doing and what is the moving average doing in order to understand how to take out trading decisions or trading indications using moving average or using exponential moving average. Both remains the same. Okay, yesterday in the previous session we discussed about all the possible requirements, all the possibilities that can be used in order to take out trading indications and confirmations using these things. Okay, like moving average, the same stands true for exponential moving average. Okay, the same stands true for exponential moving average. We have got one suggestion from Vishal, that is GBP USD he needs analysis on. We will do it. We will just see in short what will happen in this case. Okay, so both the things remain the same. Now there is a difference between exponential moving average and moving average. The difference remains in the formula to calculate both these moving averages. Okay, while calculating moving average, it is a normal, arithmetic average, and after every session close, okay, after every session's close, the moving average calculates the newer data. That means it leaves one day behind. Okay, and it calculates the recent close also, whereas the where the look back period remains the same, that is 50 remains the same. It will remove the 50th, the oldest 50th number. Okay, when we are counting from close, so it will remove that 50 close, the day 50 is close, and it will count from day 49 till the recent close. Okay, that is why it is called a moving average. The same thing happens with exponential moving average, but there is a tweak in the formula. What is that tweak? That is related to a multiplier. Okay, let me just write it down here for better understanding. There is a multiplier which is calculated, and this multiplier gives us a particular weightage criteria, I would say. Weightage criteria to be given to every single close. It leads to weightage criteria. Okay, it is not greater than, but it leads to. Let me just put up leads to. Okay, multiplier we calculate, and we apply that multiplier in order to get the weightage criteria of every single day, every single data set. I will write single data point in the data set, right? Now the data set is the look back period. Okay, just give me some time. Yes. So this is the scenario. First, we calculate the multiplier. Okay, that is dependent upon what days close or what days data it is. Okay, let's say for example it is 30th day data. So then that particular 30 is going to go into the multiplier formula, and then we will get what kind of weightage we need to put in along with this particular 30th close. Okay, I will give you an example. We'll calculate a multiplier. Okay, first multiplier is basically 2 divided by the days number. Okay, the days number, and then we add 1 in it. Okay, so what does that become? So let's say for example, if it is 2 divided by 30 plus 1. So first we need to divide 2 by 30, that is 1 by 15, and we need to add with 1, 15 by 15. So that is with we'll just calculate it. So one that comes around that comes around 1.0667, somewhere around, right? Now when making the EMA point, where to put in the EMA point, we multiply this particular multiplier along with the close of that particular days. Okay, we multiply that closing price with the multiplier, and then we add the EMA of the previous day. Okay, and we negate the multiplier from there. Okay, so the formula looks something like this. For EMA, I'm putting in. Okay, the formula would be closing price to the multiplier. Okay, EMA of previous day. Okay, that is EMA prep. I've just written for short so that it is visible on the screen. Okay, instead of creating a jumble. Okay, and then we multiply it with 1 minus the multiplier, which gives us the pure multiplier, right? So this is the scenario. We multiply here with the multiplier, and we then multiply with the pure multiplier that we got. So this is the particular formula for calculating EMA. Now when we calculate the previous day's EMA, we don't need to calculate every single data set. Okay, just like we used to do in moving average, we don't need to do that here. Okay, if we are adding in EMA of previous day, that will include the EMA of previous to previous, all the days that is counted for, that it is accounted for, right? So this is how we calculate EMA. Okay, so this multiplier will go in here, the closing price will go in here, then we will add that to this particular product, that is the previous day's EMA, and that being multiplied with 1 minus multiplier. That means we have got 1.0667 in this case. Okay, so here it will be 0.6066. Okay, my 1 minus, so that is, it is completely inverse of this particular thing. Okay, so this is the inverse multiplier, this is the multiplier. We then add all these things, and then we get this particular EMA plotting. Okay, then we will plot this on the chart. Fortunately, we don't need to do all these activities. Okay, it is simply available in that technical indicator box here. Once we type in EMA, we get the directly exponential moving average. The chart does it for us, and we are very thankful for such trading softwares. Just imagine a few 50 years back, or 60 years back, when people used to draw the charts with their hands, 50 or more probably, because it might be in that when the computers were not there. So people used to draw the charts by themselves. They used to apply every calculating formula by themselves. They used to calculate it, and then they used to plot it on the chart. And then after so much of work, after so much of efforts, they used to get one single stocks idea that where it is heading. So just remember how thankful we must be for certain charting softwares, for the technology that we are using today. And it is obviously going it is obviously improving every day, trying to make our lives easier. Okay, sure. So this is the whole in Hindi we say jhamela that we need to do in order to understand the EMA and where to plot it. So everything is in front of you. You might take this for reference. Just delete this. Okay. Now we will see the visual architecture of the difference between the moving average and the exponential moving average. What is happening on the chart that we will visualize right now. Now, note that this white line that is going, it is a normal, simple moving average, arithmetic average, okay? And this one of the closing price of the candlesticks, okay? And the time frame is 15 minutes, okay? So every 15 minutes, there will be a new data set, there will be a new plotting point of the moving average, okay? So this is the scenario. Say for example, this is the moving average, and this blue line, which looks quite interesting, and looking at this, you might say that exponential moving average is actually very fast, okay, when compared to the white line. We can say that because it is moving down with the price action, and then it is reversing with the price action earlier. It is taking so long for the moving average to reverse, right? This is called a reverse, right? And this is called a bottom reversal, right? So it is taking some time, this moving average line, to account for the newer price action, whereas the exponential moving average, which is a faster moving average, okay, it is a moving average only, but it accounts for the price action in a faster way, because we are applying that multiplier formula na. Now the multiplier if is formula is such that the newer price has been given more weightage when compared to the older price. That is why we see that the exponential moving average is moving faster when compared to the moving average. So this is the scenario. Okay. It is following almost, it looks the same, but somewhere where there is a tweak in the price action, just like this one, there is a clearer upside move in the exponential moving average. I have kept this very high, that is the look back period is very high, 50, which is not making sense. Okay, if we change it to 20, then we will be seeing the changes. Yeah, now clear? Look at how this tweak is starting from here, whereas the moving average is taking in this particular uh, line, in this particular candle, it is starting to move up. In here, it is taking a upside move in this particular candle, one candle before. Okay, now it is appearing to be negligible, but it does make a difference when we are trading. Okay, in real life, it is accounting for the downside movement earlier in this candle, but this one moving average is still upside. Okay, that is the scenario. It accounts for the newer price action in a very fast way. Okay, it is very quick in reacting to the recent price action. That is why it is called exponential moving average, right? It's exponentially moving with the price action. Now, here we are, somewhere here. Now, this is the scenario of complete uh, confusion. This is gold. Somebody has asked me, I suppose, Kalpesh, yeah. Kalpesh Shah is asking for gold, right? So, here we go. Kalpesh bhai, this is the scenario in the market, right? So it is somewhere looking around in the ranging formula, right? We are not having a clearer view whether it is uptrending or downtrending. Okay, so this is the scenario. We can use moving average as well as exponential moving average, but when we use moving average, exponential moving average, it is quicker to react to the prices. Okay, right now it is appearing as if it is in a broadening triangle somewhat. Okay, appearing to be in a broadening triangle. Let us see. It is a sticky situation, I would say, somewhat like this, right? It will range somewhere around like this. Like, okay, so it might range between these two lines, or there can be a breakdown as well, or a breakout as well. Okay, currently looking at the USD position, it is stronger comparatively. Okay, it is not strong in the long term. USD has to come down somewhere. Okay, but right now USD has gotten support in multiple pairs, so why not here, right? So it might break down from here and go down. The current scenario is 1806, right? So yeah, this can be the case. Also, as we understood from the moving average, there are multiple ways in which exponential moving average is helping us. Okay, how it is helping us is that when the price action moves above the exponential moving average line, we know that we can buy. Okay, so we could have bought here, and until it crosses below, that means here or in this candle. Okay, we need to cross our trade and we need to close our trade. Okay, we need to take the money and you need to go home. Apart from that, when the price goes down, you can short. Okay, and when it comes back up, so this is the sticky situation that I'm talking about. Now the price is in a range. That is why you cannot take a sound decision right now. Look at these candles forming the same bodies, almost. Current candle is also forming the same body. If it comes up, it will form the same body. Doesn't make sense. Okay. But if we talk about the daily or the longer time frame, let's say for example 1 hour, let us see this one. Okay. Then also, this is a very valid trend line, the one that is going down, and this is also a very valid trend line of our resistances, because it has acted as a support in the previous. We have not seen this, na? We have not seen this. We have just drawn two trend lines and look at how it has functioned in the past. So it is quite amazing. This was a breakout of this particular trend line, this one, which has acted as a resistance. Now it became a support again, and then it broke down. Then it went down. So these two trend lines can act as a reference points for us. Right now, it is in a ranging market, so we cannot make sense of this particular thing. Okay. Again, I would say that the market is less volatile. Okay, until and unless the frenzy of new year's calms down, and the people will get back to work, people will get back to trading, and the volume stabilize, then we can say something can be done in this scenario. Okay. Until then, it is ranging, it can break out either ways. We need to look at that. Okay. It has functioned so beautifully well. I am also surprised sometimes that if I'm drawing something on the 15-minute time frame, look at this, how weird it looks on this particular thing. But just go back and see how it has acted super fine in the past. We have not seen this chart, it is completely live. Okay. This is live market and we are doing this. Sometimes, it amuses me, it just makes so much sense, right? Again, talking about supports, this might be a support. Again, I have not done so much of research lately on this particular thing. Okay, on this commodity. But in the future, when it comes, I will keep you updated. Okay, so try to follow us wherever we are. Right. Apart from that, let us see another suggestion that was made by one of our friends of GBP USD. If I'm not wrong, right? Uh, yeah, we require GBP USD, right? Where is that? Yeah, Vishal. Okay. So let us see this one. Okay. I have drawn so much lines. Okay, let's see what is going on here. All of these lines are just reference points. Don't consider it to be very, very important. Okay. I try to do understand. Again, GBP USD is in a ranging position. These, I suppose, are these reference points I have made way long, very long. Okay. Way back. I don't even know when I had drawn all these things. Okay, let us just see. Past price levels. Okay, this one. Let us just make sense out of something here. I suppose these are Fibonacci levels or something like that. These are the daily levels. Huh? This was an important support. Okay, 1.2. I have posted one report also on GBP USD if I'm not wrong, because I remember posting somewhere around a support of 1.2. Let us see how long it will stand GBP. Okay. So it is standing somewhere around 1.2, and the support is somewhere around 1.2 only, and has come down from a very good position of 1.24. This upside was also kind of, I suppose I have given in some report. I'm not remembering it really well. In the next session, maybe I will show you that report. No worries. What is happening currently, that is important for our friend Vishal. Okay. Now it looks as if it is ranging, proper ranging market. Okay. This is a proper ranging market. You cannot do anything except for looking at the extremes, maybe taking it up according to the risk appetites. Okay. You have to consider your risk appetite. This is the range, extreme levels. Okay. When it comes above, you short. When it comes below it, you have to buy long. So this is the scenario going on. Absolutely working fantastically well for a very long time from the previous week also. This was from previous week. It is functioning. That is 22nd of December, 8 o'clock, Thursday, right? So it is acting since then. That is why I am not remembering, because I had posted that report in the previous week, I suppose. You can check the Vantage Markets India group on Telegram. There I have posted something related to this. Okay, so it is ranging, and this range has not been broken. The candles are very small. That means the volatility is very low. If I'm putting a volume chart also, the volumes will be, I bet that those volumes will also will be low. Okay, such moves can happen in range, okay, where people are just pulling in, okay, just pulling in all their resources, all their hard earned efforts into shorting certain things, okay. Or it might be any news as well, okay, because I've not seen the news, we have not seen the news today, right? So this is the scenario, a ranging market waiting to break down or break out, whatever, right? And these are the levels above. The levels above might seem to be very, stingy, okay. They are very short movements, but still they are reference points, okay. This is the scenario. Now, where it will go, you can check with the indicator, or breakout is obviously we can wait for breakout. You don't have to worry about anything what goes on in the news. Don't worry about it. Just look at these two reference points. This is the range. Okay. I suppose you guys are satisfied by this particular session. Uh, if any other doubts, just post it on the chat box. And I suppose we will just get back to where we were. Remove everything. Now, the thing that you all might be waiting for, okay, is the best look back period that can be used, okay, in order to get the best amount of uh, you know trading indications, okay. Now we'll just change to something which is actually working instead of a ranging market. Okay, USFD, USDJP, yeah. So we'll just change to USDN. uh, electronics. Okay, nice. So this is the scenario. Now, if we select, moving averages can be used singularly or they can be used in pairs. Okay, you can select two exponential moving averages. That is by clicking twice. Uh, Clicking this twice, you will get two indicators here, right? So, one you have to keep one shorter indicator, that is 9, for example, and one you have to keep a longer indicator, 20, for example, right? This is the scenario. You have to change the color so as to make it a little bit visible, okay. Thicken the line from here, okay. Thickness must be increased so that it is not affecting your eyes. And this one made thick, nice. Okay, this one 9 only. I will keep 9 as white color, okay. And this one needs to be somewhat of a yellow color. Fine, good. So yes, this is the scenario, okay. This is white and thickness needs to be increased, okay. So moving averages or exponential moving averages can be used in pairs, okay. This is called the pair, or we can also say, if I'm not wrong, I'm not able to recall it. It's called clubbed indicator, okay. It might be called a clubbed indicator. Actually, clubbed indicators are way more complex than these two, okay. But let us just consider for the time being. Okay, this is the club of two indicators, that is exponential moving average, used twice, okay. Now the difference between a faster moving average is that it has a smaller look back period, it has a smaller length, that is 9, when compared to a longer length is 20. Understood? This is very beginning stuff, beginner level stuff, but it will make sense when we'll see the charts, when we will apply it on the charts, right? So this is the scenario. The white one is the exponential moving average for 9 days, and this one is for 20 days, the yellow one. Now, whenever the faster moving average crosses over the slower moving average, okay, whenever the faster moving average or exponential moving average or any form of moving average, it moves above or it crosses over, what we call it is a crossover. Crossover and cross under. Okay, these are the two things we need to be minding, okay. So this one is crossover when the faster EMA crosses over the slower EMA, it is considered a buy signal. Okay, potential buy signal. Understood. And when it crosses under, look at this particular position. When the faster moving average crosses under a slower moving average, it is called a potential sell signal, right? So these are the two scenarios where you can take trades. This for a shorter position, right? Keep a stop loss somewhere here. Okay. This is called a cross under. Okay, this one is a cross under. And in this scenario, we have got a long position, right? You can trail your target price. Don't worry about target price, because target price is always, we are greedy, we know how to take out a particular position and run it for as long as we can run it in the green. Okay, so as long as we are running it in the profit, we will run it either ways. So target price, you already know how to keep it. You have to run as long as the market will run. You have to run along with the market. Don't run against the market. Okay. So this is running along the market. When we see a continuous downfall, and when we see that this situation is reversing, you can clear your position somewhere here. Okay. Where you have the exponential moving average coming down. In this scenario, you can take your closing profit in this scenario. Okay, not this one. In this scenario. Okay, so this is a good 1 to 1 risk to reward ratio. This is almost 3 to 1. So this is a good situation for us, right? And currently, now look at the current position here. Now that is why I am saying that this is a ranging market. We cannot say what to do, right? Why? Because the moving averages are also not doing anything. They are sitting idly and they are just moving along with each other. Can two fast and slow people live together? Obviously, no, right? One will be running faster, one will be what do you say, uh, an athlete, another will be a lazy person. Can both of these live in the same quarters? Obviously, not. This situation is exactly that. This is a very uncomfortable situation where the moving averages are just snaking around, where they are lazy and they are not giving us a clear indication. This is why this is a ranging situation. Okay, and this is what is happening. Understood? So we need to stay away from this situation. Although you might see, sir, there is a position of very good shorting position, a very good buying position, you can take your trade completely upon you. I'm not suggesting to not take a trade or to take a trade. When I'm saying you can do whatever you want, but this is just the educational perspective of moving averages. This is the financial perspective of moving averages, technical perspective, correct? So this is the scenario, and these are just laying around on top of each other, not doing anything. Okay, both are lazy. So we will also have to get out of this situation because the asset has become lazy. Okay, this currency pair has become lazy, so we must also become lazy, leave it here wherever it is. When there is a clearer position, we can take a position, right? Apart from that, we had drawn two intersecting lines, if I'm not wrong. We had drawn these two lines somewhere on this particular chart only. So you can see that those lines and those lines were working. So you can reference that, probably go back into the video and you can reference for those two lines. Okay, this is the scenario. Now, considering the options of what length I should use, in order to optimize my understanding of, uh, you know, exponential moving average and trading using exponential moving average. There can be a 9 or 20 days moving average. There can be 10, 20, there can be 15, 30, whatever clubbing you can do. Okay, whatever settings you want to achieve using these two indicators, you can achieve it. But from a educational perspective, from a financially aware perspective, what I have seen in the market for a very long time is that there are two look back periods which work absolutely phenomenally. Okay, I'm not suggesting to use it for trading. Okay, this is just for educational purposes. I have to remind you again and again. Okay, this is the problem that I have. I have to remind you again and again, because being an analyst, we are first considered with risk. We do not care about making profit. Everything is about risk to us. Okay, whenever you are putting money anywhere, that is a risk situation. That is not a making profit situation for us, especially. So making a risk disclaimer is more important to me than to actually teach you something. You have to understand this is all for education. Okay, this is nothing from the perspective that I am telling you to do these things. Also, these levels that I'm suggesting are also completely educational. Okay, so the risk is completely upon you. This is going down. Don't don't trade in this situation. That is what I'm saying. The faster moving average, wait for confirmation, because we have already seen this is ranging. Plus, we had also drawn that lines as opposed to on this particular asset or some other asset. Okay, so this is a ranging market. Don't worry about it. It's going down. It will break out or whatever break down. Then you can consider it for trading. Okay, so this is the situation. My first perspective is to work with risk. Okay, we are not working with making profit here, we are working with risk here. Okay, and risk is a very good thing. It's not a bad thing, it is a good thing if we know and understand it well. If we are not understanding it and we are trying to leverage our positions, we are trying to increase our profits, blindly and greedily, then we are in a big trouble. Okay, not today, not tomorrow, but someday you will realize this particular thing. Okay, I'm not saying you will make I'm not a negative about it, but I'm just giving you a disclaimer. Okay, a fair warning, that is what it is. Okay, markets are very good until you are making money from them. Okay, I have seen people who have made a lot of money, and eventually they have got the confidence to take a trade without even looking at the market, and they have suffered huge losses and they have never seen the markets again. Okay, I don't want that to happen from with you guys. Okay, so crossover, cross under, we understood. Now we will look back and I will give you a suggestion. Okay, since you have been uh, a very patient listener. Thank you very much for that. I will give you a very good tip, okay, that you might use it for yourself. The shorter trading period should be kept as 7, okay, and the longer should be kept as 13, okay. Now look at this scenario. Both are very, you know, close to each other, but they will give you fantastic opportunities to trade. I've just got this particular trade and this particular trade. But in this situation, I'm also getting a buy position here. I'm getting a sell situation here. So the risk increases. Okay. Again, the risk increases because it can happen like this also, the current situation. But this is a positive situation. Okay, so risk is completely upon us to play with, but we need to be very, very aware of what we are doing. Okay, so this is the session. Thank you very much for listening very patiently. Now, why I have used 7 and 13, that also I will discuss probably in the next session, because I'm completely drained. And thank you very much for being very patient and listening to this session. And we will see you directly in 2023, and with a very good huge smile on your faces, I would say. With great prosperity, we will see 2023, and we will see a lot of trading opportunities in 2023. We will do a lot more than just create, technical videos. We will be doing a lot of other activities as well. So just keep on trading. Okay, do not consider me to be a guide. Okay, to be a mentor or a guide. I'm just an analyst. I'm just providing you the financial education. Okay, the risk is completely upon you. Nobody will come to you when you have incurred a loss. Okay, so this is very important that we understand that the whole responsibility lies on us. Nobody will come to us in order to explain this situation, right? So this is very important. And thank you for being a very patient listener. And we will see you in 2023 with a huge smile on our faces, with a good perspective, with a clear perspective of where the markets are headed. Okay. So again, a very, very early and advanced Happy New Year to everyone, and may prosperity lie in the new year that we are going to have. Let us achieve more than what we can and what we are, uh, capable of. Let us achieve more than that. Okay. So thank you very much for giving us this opportunity. Please leave a like and subscribe or a comment, whatever you like on the video, and we will see you in the next year. Okay. This appears to be a very good line. I will see you in the next year. It appears to be very distant, yet it is just a week ahead. So thank you very much for joining in, guys. Till next time, happy trading.